Hi guys, Alpha Wolf here. So in this video, I'll be explaining to you guys how you can understand market structure with ease, then how you can take trades with accuracy using market structure, to take trades of break and retest strategy. Now, when I started trading, I thought I understood market structure, and I theoretically understood the break and retest strategy that when the price creates a new high after the previous high, it's going to pull back. All right, and if it pulls back, it's going to pull back to like 50 to 61.8 retracement. Then the price, if it is in the uptrend, the up market, if it's a bullish momentum, the market is going to go up and break the previous high and create a new high, which we call a higher high. That is theoretically what we do. Then you enter your trade in that pullback, you take a profit, in the first high the market created, or you take it, you increase it, to the higher high. That is how we trade market structure. But the problem was, I'll be in a trade, I'll see the pullback, and the market will show me signs that it wants to reverse. Then I enter, the next thing the market comes back, kick me out, and boom, go straight to where I was expecting it to get to. But then I've been kicked out of the market, and I keep wondering, what is wrong? What is wrong? What is wrong? Then with time I realized that I did not really know how to draw market structure correctly. So in this video, I'll show you guys the way market structure works and how you can draw market structure correctly so that you can become profitable as a trader. Now, generally, market structure is very important in trading, because without market structure, you don't even know what the market is doing, the direction the market is going, and how you can enter the market, right? You need to understand where the market is going, the story it is telling, and how you can enter the market for you to be able to, enter the market at the right time and take a profit at a very good place, so that you know when to enter, you know when to put your stop loss, and you know when to exit the market. All right, I'm going to show you guys a trade I took yesterday. This is yesterday. I traded Solana, and you see this particular trade, this is based on market structure. This market at the time I took this trade was on an uptrend, right? Okay, so when the market got to this point, I marked this zone. This is the eye of the market. This is the eye. I waited for a pullback, and when I saw the pullback, I waited for a confirmation. You can see that in this chart, you can see something like this line. I caught it, a confirmation. And let me go to the 15 minutes time frame. You're going to see a pattern that I was teaching you guys about, a reversal pattern I taught in my last video. This is it, the W pattern. It formed here, and the next thing, the market went up. All right, now guess what happened? This is the high of this market. In this place, I had closed some percentage of my profit because I was expecting the market to reverse, and then I still had I'd closed I think 75% of my position here. Then I had 25% running, and when the market got here, exactly here, this is the way I set this trade. Then I closed the remaining part, and guess what? There was a strong push downward. Now, so the market reversed strongly. Now, how do you enter trade with the knowledge of market structure? That is what I'm going to focus on in this video. So what I do is, normally before I come to the point where I try to explain practically to you on the chart, I try my best to show you guys theoretically what I'm trying to explain so that you can have a good understanding. Now, market structure, basically, we have three directions of the market. If the market is moving in an uptrend, you see the market move like this. It will create high, higher low, higher high, higher low, higher high, higher low, higher high, right? This is it. Now, when you see the market create this, you can now say this market is what? It is in an uptrend. And why is this market in an uptrend? All right, this market, we say it is in an uptrend. And why is this market in an uptrend? Because when you look at it, you can pull this line straight here, and you see that each time the market pulls back, the next high is above the previous one. All right, what do I mean? Look at this. You see, when the market moved from here, when it was going to pull back to this place, guess what? It did not break this one. When it was going to pull back to this place, guess what? It did not break this one. All right. And if the market continues like this, we are still in the uptrend. Okay, we are still in the uptrend. All right. Now let me know. I don't want to go too advanced. I want to take it little by little, but I'm going to show you guys something. Okay, like this, we are still in the uptrend because the market is still creating higher high and higher low. All right. So this way, we are still in the uptrend. Okay. Now, if this market, after coming here, okay, creating this higher high, I want to teach you guys something that some people will find confusing. Then it comes back to this place. All right. Yeah. So now the market, instead of it to come to this place, it doesn't move there, it doesn't reverse there, it still comes down here. All right. Are we going to say this market is still in an uptrend? Pause and think. Now the answer is yes, because as far as the market is still in this zone, we cannot make any decision but to still assume it is in an uptrend. All right, because the market can come to this zone and still go back up and create a higher high, or it can even come to this place or it can even come to this place and start ranging. So for that, we cannot say the market is not in an uptrend. We just assume the market is still in an uptrend until when we see the market ranging, then we can now say, oh, this market is in a range. It means the buyers and the sellers are fighting, they are equal, they are struggling the price. So we have to wait to see if the market will continue the trend or is going to break. So number one, the market doesn't break the higher low. Number two, the market creates a higher high. All right, so this way we can look at the market like this. This is the high. Now this is the higher high. Okay, the market creates a higher low and then it goes up, higher low, it goes up. So as far as this market is still creating higher high, this way we are still in an uptrend. Then if the market comes to a point where it doesn't break this level, okay, it has not broken this place. I'm telling you something very important. Take note, it has not broken here yet. So what I mean is the market has not broken this zone. This is a key zone. See, so the market has not broken this zone like this. It has not broken it and it keeps going. Then for now, we cannot say the market is in a downtrend. But anytime the market breaks this zone, okay, then we can now say the market is looking like it has changed direction. Then we'll wait for a retest in this place, okay, and if it cannot break up, we can now say now we are in a downtrend. So market structure basically is the market is either in an uptrend, all right, in a sideways trend. You can call this sideways trend, you can call it a range, you can call it a consolidation, right? Or the market is in a downtrend. Okay, the market is in what? A downtrend. So if the market is going to be in a downtrend, what happens? The market will break the zone, all right, retest here, create a lower low, create a lower high, create a lower low, create a lower high, create a lower low, just like the way the market was going up. All right, now this is market structure basically. So when we see this, we can take trades like this, right? Let me show you guys. We can take trades like this. So the market came here, pull back here, created a higher high, you understand, then it pulls back. Now I can see after my trade like this, then my TP will be to the previous high. Okay, I can take it to the previous high, or I can now say I want to extend it, you understand, and make more profit. But the safest place to take your trade is to the previous high, because you are guaranteed the market is going to read this high. But if the market will reverse, you cannot say. So you take the trade like that, and then you allow the market to break above this high, pull back. When it pulls back, another position is here. You can take it to the previous high, which is here, and you put your stop loss tight. Okay, because this is the previous high, so your TP is here. You allow the market to create a higher high, you get, then the market pulls back to this place, another trade is here. All right, that is how you continue to trade this till you get to the top. Now when the market is ranging, you can actually trade a ranging market. So anytime it comes here, but a lot of the time we tell people don't trade a ranging market because you just lose money. You don't know the exact time the market is going to break out or when it's not going to break out. So there's no need for you to trade a ranging market. Then the market now reverses, it starts coming down. When you want to trade a market that is on a downtrend, all right, you can do what? Mark the previous low like this. Now the market came here. Normally, as this market pull back to this place, I'll be observing here as a key area. So once I see some reaction here, my first trade, I can take this trade like this, short. This is it. Okay, I'll take my TP to this previous place where the market went to, the recent low. You understand that the market will now break, come here, create a pullback. This place again is another key area for me, you know, key area. Let me show you guys key area. This is a key area. So in this case, I mark this is a selling key area, so I'll just put it as red. Okay, then I can take this trade like this. I short the market from here, so my stop loss will be here, you know. So this strategy, basically trading this way, is called trading the break and retest strategy. Now theoretically this looks very easy, very easy. So it's like, oh, when the market creates a higher high, it pulls back, you enter the trade. Everybody will just tell you this and you'll be like, oh, this is so simple, I can trade it. Until when you get into the market, then you realize that the market doesn't just move like this. So in the real game you know, you get confused because you don't even know where the exact higher low is, where the pullback is getting to. So I'm not going to give you a rule that will not be the eye opener. So in the real game, the market can come like this, right? Create high, pull back, all right, do like this, 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 then do like that, all right, then come again, do like this, like this, you know, then like that, and goes like that, you know, then goes up like this. Let me stop here. So the question is, how do you trade this? You know, how do you trade this? Because when do you know the best time to enter the market? Because as the market pull back here, you could have decided to enter here and the market will still pull back more, all right, and it will still do what? So let's say, based on the way I explained this now, because it was a clear trend here, based on the way I explained it, if the market had given us this kind of sign, all right, so this is also an uptrend, all right, this is an uptrend. But how do you trade this? Because if you follow my first explanation, now as the market went high, you'll be waiting for a pullback, okay, and if this market pulls back like this, you want to enter here. Immediately you put your take profit to this place, you put your stop loss here. Guess what will happen? The market will range the next day to kick you out, and you'll be like, oh my god, what just happened? And the next thing, you see the market go up. I'm sure a lot of you have seen this happen. Now the next time you say, oh, I'll wait for another pullback, the market pulls back like this again, you know, you will say, oh, let me just enter the trade now. You will go like this again, somewhere around there, sorry. So you enter from here again, all right, trying to take this place, and then you put your stop loss here. Then the market will come kick you out and go up. I used to pass through this kind of challenge a lot, but what did I understand? There I understand the rule of market structure. The market is going in an uptrend. Now when the market is going in an uptrend, one major rule you need to understand is that as far as the market has not broken, right, the previous low, as far as it has not broken the previous low, it is still in an uptrend. So what do I mean? If this price goes here, starts from here, now I'm going to advanced market structure explanation. This is going to get complex. Some people might not understand this watching the first video, but you need to watch it again, because this could be where you get clarity on. Now, if this market comes from here, okay, and it goes up, all right, I need to make this one easy to see. All right, so let's increase the feel of this. Okay, and it creates a high like this. All right, so we know this is an uptrend now. So this is a high. Okay, the next thing is that our plan is when the market pulls back, we are going to enter. Now, this is the rule of how you look at market structure correctly. This is the rule. If you understand this, you will save yourself losing money. The rule is, as far as this particular market, when it's pulling back, okay, does not break this particular key level, this one we call it a key level, right? The market can reverse from anywhere and it will still remain an uptrend, which simply means the market can decide to do Fibonacci retracement and come to 50% retracement or 61.8 retracement and go up, or the market can even decide to come as low as 80% retracement. So the market can decide to actually move, excuse me, from this place to this point, yeah, before going up. And as far as it did not break this key level here, this low here, then it creates a higher high. It is still an uptrend. So this place is your pullback zone. It's a place you need to observe. There is no place it is written that it must be 50% retracement or it must be 61.8. You understand? The most important thing is that as far as this level is not broken, you understand, and the market creates a higher high, is still in an uptrend. So all you need to do is to make sure that while you are looking for a pullback or a reaction of the market, you understand, to go up, you are also conscious of the fact that the market can decide not to reverse where you are looking at. It can reverse as low as this place. It can even come here, create a double bottom and still go up. You understand? So that way you can be looking at the market from two things. I call one POI. POI. All right. From a POI perspective, what does POI mean? POI, it means from a place of points of interest, okay, which some people call Fibonacci retracement level, and number two, you can look it from a key level. All right, so a key level is basically a tested zone where it is confirmed that the market had moved from in the past. All right, with strong momentum. Let's add that to it. Do you understand? So a key level is a tested zone where the market had moved from in the past with strong momentum. So if the market probably retraces to this area and it does not move and it's still coming down, you need to relax. And now let's say as this market went up, theoretically I'm trying to show you something, right? I don't think this video is getting too long already, and I would maybe have to continue later, okay? But if you can understand what I'm trying to explain here, it will make a lot of sense. Now let's say we are in the market went up like this, created this high. Now based on Fibonacci retracement level, we are supposed to be looking at this area 0.5 to 61.8. So when the market came here, some people will be looking to take a trade here, which if they enter here is not wrong, because the market can come to this point and go up, or come to 61.8 and go up, and it can even come to as low as 0.8 and still go up, okay? And the market can decide to create a double bottom and go up as far as the market has not broken this particular key zone like this, all right, we are still in a uptrend. And if the market is going to break a key zone, there are rules of what we should see for a market to break a key zone. Okay, so even if the market comes and creates just close one candle below here, it could be a fake out, a liquidity grab. So for the market to break a key zone, we need to see at least 2 strong bearish candles close below the key zone, 2 red candles close below this key zone. Then we can now say, okay, this market has changed direction, is no longer in a up trend. So basically, when you understand this, you can now know clearly that is either I enter this trade from here. So when you understand what I'm trying to explain, your expectations will now be from this 50% Fibonacci retracement level to this key level. Anything can happen. All right, as far as this market has not broken this zone, anything can happen, and whatever happens, I need to know what I'm looking out for me to enter the trade. And what do you need to look out for to enter the trade? You need what I call price pattern and candlestick. What I'm teaching you now is advanced trading knowledge. On the basic level, people will just tell you, oh, the market is going to pull back 50%, 61.8. If you go back and do your check very well, there are a lot of times the market have put 50%, 61.8. You enter the trade, you hit your stop loss and still went your direction. The question is why? Because the market can move from those points of interest level, or it can move from a key level. You understand? Depending on how the market decides to move that time, the activities of the buyers and sellers. The only reason people tell you look at 51.8 and 60, Fibonacci retracement level is that most times people believe that when the market moves in a strong momentum, it will lose 50% of its position to 60% and continue up. There are times that it doesn't even come to 50% or 60%. It just does 31 or 30% retracement and continue to go up. And there are times that it will go up very far and it will not even retrace until later. The market can just range, and then it is now becoming a supply and demand move. I don't want to go there. That we call up. So we call it up, okay, base and up. For people that are advanced traders, they understand what I'm trying to explain. But basically, the point I'm trying to make to you is the market must not necessarily move like this. Higher low clearly, you understand? So it could move higher. It could move like higher. So the market could move like this. It could create a high, create a range around this area, all right, then continue to go up, come down, do like this, all right, continue to go up, all right. So as far as you are concerned, what is of interest to you? Number one, this is a summary before I now show you practically how I took a trade with this. Is this place this market move from the first wave? Number two place of interest to you is this high, because that is where you take your surest take profit, okay? And number three place of interest to you is where it finally reverses from. So the next time, every other drama that happens from within here to this point is none of your business, okay? It's none of your business, except in a situation where the market comes to this place, so every other drama that happened to this point is none of your business. You are looking at your key level, you understand? If the market, it comes to your Fibonacci retracement level, you don't see any sign it breaks it, then the next thing is you are looking at your key level. And while you are looking at your key level, you cannot say the market has changed trend, because the market can decide to come here and create a higher high. That is what I'm trying to explain to you. But once this market breaks here, and I've explained to you in this video earlier, what you need to see to confirm the market has actually broken the structure or changed direction, I've explained it to you. Once you see it, then you can say, okay, now this market is looking like the trend is about to change. All right, so guys, I'm going to end this here. If you don't understand this video, please try to rewatch it again and again and again. What I'm teaching you is very true and is very, very real. Now let's go to the chart. Let me show you guys something that can be beneficial to you. Okay, now, so look at this chart here. Look at this chart here, right? If I tell you to draw the market structure, okay, in this chart. All right, you just get everything complicated. Okay, now you're going to do like, okay, let's say you're analyzing from here. Now you're going to say, oh, this market is in an uptrend, but in an uptrend you see the market go up here, pull back, up here, pull back. This becomes a range, right? You do all this one, then you come here. Then it looks like the market has broken structure because this is the low point before, but the market comes to as low as this point. All right, then you get confused, then the market starts going up. Then the next thing, the market comes like this. Now you're thinking this is a low, a higher low. The next thing, the market creates this one, and then you're confused again. It's like, what's going on here? Then the market goes up. Look at the way this market went up, just straight up, boom, and then it just comes down, go up like this again, and the next thing it just goes down. So the thing is, you get confused because you don't know how to read the chart. So basically, when you want to draw market structure, it's very simple. I tell people, if you are a beginner, all right, you can draw it. I can draw market structure from any time frame. For me, if I draw my market structure here, you'll be like, no, bro, what you are drawing here is not what you are explaining to us. But it is actually what I'm explaining. It's just that I understand this thing to the point that I know what I need to see. I took it from the noisy 15 minutes time frame, and I want to draw this in a 1 hour time frame. Okay, if you even go to a 4 hours, it becomes clearer. All right, but I'm going to use the 1 hour time frame to draw this market structure. For me, I'll draw this market structure like this. Now from here, this is a valid pullback. Okay, then the market comes down more here. This is a valid pullback, then the market comes here. All right, now this is a range. Okay, so after this range, this is the next move for me based on my understanding of market structure. So here the market creates a pullback, which shows me a change of market direction. All right, then it creates a higher high and creates what, a higher low. But I told you, all right, that as far as the market has not broken this key level, anything that happens around this place, you know, I have to be patient. So the market comes here, from here, does what, creates a new higher high. So this place now happens to be a key level. You can see I marked it green, I mark here green, this place is also green, this place is green. These are the structures of the market. Then what happens next? The market comes here, creates a pullback, then it comes to this point. Okay, then now the market came down. When the market came here, this place is a place of point of interest for me, because based on Fibonacci retracement, all right, this is like a 61.8. So I was looking at the market in this place, and when the market showed me sign that it was about to go up, I entered my trade, put my stop loss, and boom, that was it. Okay, now if you now want to see clearly the entry of my trade, you can see that because I understood the market structure properly, I had marked my zone. 1, this place is a key level for me. All right, this place is a potential place the market can reverse based on point of interest that I explained to you, Fibonacci retracement. And what do I mean by point of interest? When the market made this first move from this point, from this point, from here where he made this move to this place, my point of interest, what I told you, is from 61.8 to 0.8 from this place. All right, is my point of interest. Some people will take that point of interest from here to this place, which is also not bad because you can see the market actually moved from there. But me, I take it from here, from 61.8 to 0.8 from here. This is my own, the way I look at the market. All right, so from here, look at it. Immediately the market got to 61.8, it showed me a very strong candle that shows that the market direction has changed because buyers have taken over from the sellers, right? Then the next thing, I waited for my pattern, a confirmation, which is, look at it, my W pattern. I explained this in my last video, and guess what? I entered the market around here, put my stop loss tight below this place, because this candlestick, this strong candlestick, has given me confirmation that the market was about to move, and with speed, because the place I entered from was a point of interest. Okay, with speed, the market went up. My take profit one was here, okay, because this was the previous high, and the market can choose to reverse from there. And the next thing, you know, there's a way I still analyze, and I said my take profit 2 will be in this place, and guess what, the market just moved slightly above my take profit 2. You know, I took my profit and it reversed. You understand? It reversed, and it reversed with force. And the next thing, the market now is in a downtrend. Okay, so guys, I'm going to stop this video here. This video happens to be very long. I don't plan for this video to be long, but I hope that you're able to pick some things in this video. If you find this content helpful, please don't forget to hit the subscribe button, turn my bell post notification on, share this video, leave a comment, like the video, and I hope to see you in my next video where I give you another quality content. So because this video is too long, I'm going to break this video into part 1 and part 2, and I'm going to post them back to back. But you have to watch the part 1 before you watch the part 2 so that you can understand this thing clearly. All right, because the video is too long, a lot of people will not watch it. So I'll break this video into 2 parts, the part 1 and the part 2, and I'll let you guys go and enjoy yourself and watch the video.